Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Cucchiara.
Hey, you got a lot of automation down. You used to have all these support people. You just press your own button right now.
That's right. Welcome in. That's it. Welcome in. It's Joe Cucchiara with Real Estate Radio Live. I'm going to have to kind of remake what I do here. I do it so, not as often as much. And every time I come on and do these podcasts, I feel a little embarrassed because I tell the audience, the listening audience, that I'm going to try to do them a little more often, and something gets in the way, a lot of things happening in life. And so, but I'm trying to get to them at least once a week. But so it's great to have my good friend Jack Russo back. As you guys know, we used to do a regular show on a regular basis. Today, we're going to talk about technology and, what it's done, if anything, for the mortgage and real estate industry. And I certainly have my opinions on that because I deal with that day in and day out. And I know Jack has his input as well. But before we get started, Jack, kind of give the listeners an idea what you've been up to. I know your life has been a lot different the last couple of years. You went to Florida thinking that you were going to take care of your parents and family, and now you're still there. Tell us a little bit about the developments.
Yeah, so I think COVID had a major impact on most professionals.
Yeah.
Because people didn't want to come to an office anymore. Professionals moved quickly to this Zoom, Teams / WebEx based. Skype used to be the way we did it years ago, but Skype seems to have been supplanted by Teams and by Zoom. Zoom is probably what most lawyers use. Where there's this telepresence to some degree that people, the lunch costs, all these things that do add up, the clothing budget. I mean, you could add, like somebody made a list, there was like 100 items that are different between an office life versus a virtual life. So the footnote I'll drop is I keep seeing articles that say, oh, you want to skinny down the size of your organization, just tell people I have to come back to the office. They'll quit. They'll say, this is not for me. I want a different life. And I think there is some truth. And I think a lot of larger law firms have been trying to drive towards come back to the office routine. Tesla, I know, recently made that demand. And I think there's been a lot of pushback. Creativity happens in an office. I think to some degree, Apple took that view as well, but wasn't well received. So we'll see where that goes. They've deferred it. I think Microsoft has been a little bit softer on a more hybrid approach. So we ended up because my brother was ill, my mom was ill, Lee's mom was already in a nursing home. We ended up coming to Florida. I took the Florida bar and passed it. It's like my brother died first in hospice, then my mom died, and then the remaining person was Lee's mom, and she died yesterday afternoon, under normal circumstances. If you call death normal, if you can do it in your own home, in your own bed. I mean, it was in our home, but she had a room, had her own bathroom. Basically, a portion of the house was exclusively hers, and she had nursing care and hospice care. It's a very quiet, peaceful way to go with the right music on and the right environment. I mean, if you have to decide how to go, I would say you don't want to do it in a hospital, and you don't even want to do it in hospice. You want to do it in your home with loved ones around you. But then I guess there is a point when all the goodbyes are said and your body is shutting down, and you can't really will it to stay alive. The cells themselves are just disintegrating. So that played out for her at the age of 93, 82. And of course, he probably had a whole lot more money than most of us do. So he could afford whatever was needed. I don't know how he died. Of course, we never really get into, well, was he in the hospital? Was there like all this dramatic work? Because, the medical machinery probably can keep your brain alive, maybe. Right. But the rest of your body just shuts down. And some people think
yeah, I think feel pretty good considering the fact that you guys had the resources, the wherewithal, the kind of, the mindset to help your family. And that may sound strange to some, but as you know, Jack, that's not a normal, a lot of families would profess to be very close or whatever, but for financial reasons, for commitments of work or occupation, you got to feel pretty good that you and Lee were able to provide that.
Call at the beginning of 2020, pre-pandemic. Hey, you guys are actually going to be spending the next couple of years taking care of various family members who are in the process of dying, not from COVID per se, but basically from old age. We said, what are you talking about? Of course, we wouldn't have believed that there was going to be a pandemic as well, nor would we have believed that there was going to be massive fires in California and a lot of smoke. We wouldn't have believed a lot of things, but, life, you have to make lemonade out of the lemons that you're dealt. We look back saying we probably would have regretted not doing it.
Right.
And then gone to the funerals saying, well, the funerals probably would have occurred, months, if not years ago, because they wouldn't have gotten the quality of care that they ended up getting at, very expensive personal private care providers. So, in general, it does set a stage for our own expectations, more or less in bed with no real functioning brain there is brain activity, but it's very passive when you're at that stage of like you're just wilting away. My mom was pretty sharp to the end, but her mom wasn't. And then again, my mom died first, so go figure.
Well, there's a lot to be said about that, and as we transition from that to technology, we started talking about technology and working from I would say that with COVID, the shutdown, all these different things, you could make an argument. It's not just my view. I'm sure it's yours too, Jack, that technology really didn't slow down. And you can make a case that it may have accelerated the pace of the use of technology in a forced manner because of the pandemic. And so that brings me to what's funny to talk about technology as technology relates to assisting the transaction, so to speak, with real estate or lending. Lending has made some progress, but it is funny to me. You had sent me an email, and I laugh every time I see this Rocket Mortgage and One Stop Shop and all this stuff, because I know behind the scenes, that's just really marketing. And that unfortunately, financing is still kind of financing. So we're going to talk a little bit about maybe some of the advancements, but I can tell you today, as we sit here and discuss things, it's a little more user-friendly. People can navigate an application online. They can upload documents. All that is true. And you could say that's an advancement. But what's sad is that, you still have a traditional real estate contract. Yeah, there's DocuSign. Okay, so Dean, you still need pay stubs and bank statements. And there's a bit of AI that's playing a little bit of a role in mortgage. But I'll have to say that if I was giving a grade that in technology and the use of technology and advancement with mortgage, I would say the mortgage gets about maybe a C- and real estate gets a D. Wow. Not very good.
No, because you're based on some credit scores.
Yes.
And then they set whatever limits they set, and then you get a card issued. And it's pretty amazing how quickly they've kind of nailed that down using all the data sources that they use to make the credit decision. That's more or less, there's no real underwriting.
No.
like you could argue they've come close to that in the non-jumbo approach. What is that? A mortgage under 800,000?
It's referred, to Fannie Freddie. Basically, any Fannie and Freddie, loan amounts are pretty simple because they've got what's called a desktop underwriting review. So they pull credit, analyze income, and if it's W-2. But seriously, even with that, if you're self-employed or you're in between jobs, it's kind of a full stop, and they got to do a manual underwrite.
Right. And so you could argue that the banking system for most of America that wants to own a house that has the down payment where the ratios are all, within reason, that works. But if you go into a markets like these hot markets like Northern California, Silicon Valley, Austin, Texas, where the real estate keeps going higher and higher because the high-tech companies are paying more and more for talent, and the talent is demanding, more and more amenities in the real estate, and the real estate just keeps going up. Evaluation, and I guess what's the shortest amount of time, even on a jumbo? Like, what would you say the shortest amount of time? 3 weeks?
Yeah, I mean, we could do loans in 2 weeks. That's not. It could be difficult if you're self-employed or have some partnerships and different things. It could get a little more complicated, but 2 weeks is pretty quick. 30 days is about the average still. But the other piece of this puzzle that it just is upsetting and shocking to me, but again, I know it's bureaucracy and there's so many different levers being pulled, is this whole concept that we still need appraisals is ridiculous to me. So
because the Zillow numbers are used by so many people as ballpark that it's pretty amazing.
We have enough data now, and with AI, the use of AI and really data points, I would argue that unless someone's putting maybe minimal down or 100% financing or FHA, I could see why you might want to secure yourself with an appraisal. But if you're refinancing your home and you got $1 million and your home's worth $5 million, why in the world would you need to have an appraiser come out and spend 10 minutes and charge you $1,200 for an appraisal? It's ridiculous.
Yeah, it's almost like they're trying to deal with these edge cases where the property is falling into the ocean or something, and you can't see that unless the appraiser says, "Oh, well, I'm going to walk to the backyard, and there's a cliff here, and there's no support for it." Well, that changes everything, right? I mean, these really are rare cases that sometimes do play out based on what's happening at property, but it's like a black swan event. And there's a big business. Obviously, that's part of what happens in America. Once a business gets into the ecosystem, it's like hard to shake it out of the ecosystem because it's just
it is,
right?
Yeah, you and I have talked about this for years. That was one of the reasons I started Bundle Select and was hoping to streamline and simplify and bring down costs. And one of the things that I found out that still talk about appraisals, I think probably the single biggest kind of, I don't want to call it scam, but maybe, I don't know if it's joke or obsolete system. I'm not sure why we use it, but it's ingrained into is title and escrow. I mean, that's you talk about not using technology. You have to use a third party, and the reason they tell you is that, someone else has to handle the money. We don't want a third party doing that. We're going to have to do this and this. So title and escrow, transfer tax, and all that ends up becoming one of the most expensive parts of a purchase or a refinance. And down the road, I know blockchain is supposed to take care of this, but in the meantime, similar to the appraisal system, Jack, that you just talked about it, you have an ingrained component of an industry or a transaction that is almost impossible to get rid of. It takes a while.
Yeah, I think once that ecosystem player gets enmeshed into what I'll call the workflow or the flow of documents or the flow of checklist items, it's like they're in. They're in until something really earth-shaking changes the flow, like something just dramatic. Like you could argue this whole notion of a cryptocurrency and a blockchain to create this reliable set of information that's available with transparency.
Right.
Like you could argue that's supposed to be the title recording system. Like the title recording system is supposed to be transparent and clear and so on.
Right.
Well, if it is, why do you need insurance? Isn't the seller, like you could argue why, like there could be some edge cases, I suppose, dealing with boundaries and the like. But classically, if you have a system and it really is transparent and reliable, then the owner is there as the owner.
Right.
And you can see it in the system. And it doesn't need an insurance company to say, yes, we'll back up that this is the owner. That's just adding further expense to what should be the seller is selling. I mean, look, years ago, I think people trusted each other more. And they were like, yeah, I know you, you're the neighbor, you lived here forever kind of stuff. That all changed at some point in the 19th or 20th century with the introduction of fraudsters who tried to sell property multiple times, I suppose. You hear stories about this in other countries that don't have the kinds of systems we have. But in theory, the real estate system of recording is pretty computerized at this point. I suppose there are all sorts of potential for fraudulent signatures and that sort of thing. But if you think about like how reliable it typically is, you would think the title insurance companies would be worried, but I don't think they are.
No,
I think they're like, we're ingrained where it's going to take a nuclear warhead to change things. It just isn't going to happen, you know?
Well, and I was reminded several years ago when I started this journey where I was interviewing executives at the title companies and real estate companies and lenders putting Bundle Select together. I was reminded, someone told me, and I'll never forget it. They said, they looked at me funny and they go, Joe, who do you think runs title companies? Who do you think, whose best interest is the title companies stay in the business? And it's true. I never really thought, not that I didn't think about it, but their point, they looked at me and they said, insurance. As long as insurance companies are involved with something, it's almost going to be impossible to move them out of that puzzle. There's so much power and strength and lobbying with insurance. That industry is, I'm not sure that there's a more of a mega kind of multi-billion-dollar profit machine next to the oil business than the insurance business.
Yeah. I mean, I have to say that insurance is a big part of America. Mm-hmm. And the insurance lobby is a big part of the Washington, D.C. Beltway lobbies. I mean, that's without doubt. And so you could argue that it provides some stability in America. You could argue it provides a lot of wealth to the owners of insurance companies. Mm-hmm. And so ultimately, you could try to trace who are those owners. I mean, some insurance companies are owned by their policyholders, but a lot of them are just profit-making entities. And I guess the sad fact of life is they get bailed out by the government.
Right.
When something goes completely sideways, it's not like they can fail. They get too big to fail. Yeah. So in many ways, it's a great business because you don't have to worry ultimately about failure because you'll get bailed out. Yeah. As occurred at the time of the crisis. So, we're on the topic of innovation, and the innovation thread continues because people want to believe that you can create this flow of data that can correctly result in decision making that can lower cost while lowering risk and producing faster, better, more informed, more correct, more efficient transactions. And a lot of these businesses are trying to do that. I mean, they really are genuinely trying to take advantage of the data. So the latest one that is in a similar fashion is can you buy car insurance based upon your actual miles that are clicking off into the cloud that you drive the car?
Yeah.
Because arguably you shouldn't pay the same rate if you're only driving, 5,000 miles a year than if you're driving 50,000 miles a year,
Right.
or if you're using your car as an Uber driver, for example, right?
Right.
So this data-driven, look, we've got this data-driven world, and more startups are trying to figure out ways to take advantage of the data and trying to figure out ways to take advantage of streamlining it.
Right.
But you're right that there's big hiccups along the way when you run into, well, this is too big of a mortgage.
Right.
Or this is too challenging of a set of data. It's not traditional W-2 income that we can verify.
Right.
It's income from all these other sources.
Yeah, it is. So yeah, I would just say we'll have to cut the podcast a little short, but I'd like to do before we kind of finalize this is do a part 2. I'd like to hear, and I know a lot of people would too, is, your perspective on how technology, if anything, or how the world of the legal world is changing. You're living it right now. You're licensed in all these states. You're still doing a lot of work. But I'm not sure that you would have thought, I don't know, 5 years ago, 6 years ago, if someone said kind of similar to what you said earlier, Jack, you may end up in Florida, and don't worry because your business won't be hurt by it because you don't really have to be in Silicon Valley to succeed. How far along or how far back did you ever think about that?
I didn't give a lot. We had these family priorities, so I thought I'd be jumping on planes and, fundamentally I'd make it all work. And I have. I've jumped on a lot of planes, and certainly I don't think it's healthy, frankly, to doing a lot of travel. I don't know that it's that healthy, to be honest, to be working solely from home. I think the dynamic is different. I still prefer an office. I would still prefer a conference room.
Right.
I'd still prefer a whiteboard. I'd still prefer a face-to-face client meeting, but a lot of clients don't want to have. The truth is they don't feel comfortable yet in going back to that mode. At the same time, when you deal with clients that are getting older, you have to understand, they're putting their health first, and they don't want to risk even the slightest chance of an infection. So they're still, to some degree, quarantining themselves. I think it's different state by state, but I know people that still wear masks when they're out and about, sort of going to a Starbucks or something for a cup of coffee. But in general, I think the one thing I would say is that legal tech as its own, like fintech is what you could argue all of what you do is. Legal tech is becoming bigger and bigger in the legal world. And the expectation is that every law firm will have some version of a platform running, and not just Zoom and not just Office 365, not just the standard stuff, but some sort of platform that provides clients with a more automated way to get very basic answers that don't even require a lawyer to intervene.
Interesting.
And that sounds crazy. That sounds nuts. That sounds like that's too futuristic. But clients want a much more immediate response. And some of these questions, of course, they go to Google for, but they're noisy. Google tends to be very noisy.
Right.
And it's not going to give you the best answer. It's going to give you a series of answers. And the future is going to be then clients going to whatever law firm that provides some sort of coin-operated approach that says, well, Google gave me this range of answers. Can we get some refinement on this? And there will be automation that will give some refinement, maybe even with some statistical boundaries, like 9 out of 10 cases, this happens.
Well, we'll do if you have time next week, let's follow up doing a lot of podcasts specifically more around how your industry is changing, how you see the dynamics taking place. Because I think as this world is more remote, in-house, out of the office, all that, it becomes more interesting, our day-to-day lives from all these aspects. How will we navigate different parts of the industries? But before we do that, just give our listeners, Jack, a quick review of how they might be able to reach out to you if they need any kind of legal services. I know you're licensed in many, many states, and maybe just give us an overview before we duck out today.
Sure. So you can always reach me by email, which is jrusso, JRUSSO @computerlaw.com, computerlaw.com. Go to the website too, and there's a form that you can fill out that just provides some background of what you're interested in. We do still answer the phone, 650-327-9800. We do typically give you a no charge kind of can we help you half hour to see if we can help. Sometimes we can, sometimes we can't. And we make some suggestions when we can't, what the best resources are for cases that we can't help on or clients that we can't help with. And in general, I would say most people kind of, they usually shop around. So what we find is they're usually going to Google and they're seeing that we've got some great reviews. I mean, they're all like 5-star reviews on Google. And then they get a certain sense of, okay, who is this person? And they probably listen to a few podcasts too, because they want to get a sense of who are you? I mean, that's what you're doing. You're providing them an alternative way to experience your brain power and your logic and your thinking, and then how you approach a problem, or how you would try to define a problem, and how you would try to generate a solution to the problem, whatever that is. And that's really the talent that you're ultimately buying. I mean, I've been doing this for over 40 years. I would like to say I could still do it for another 40, but the numbers don't work. I think I get above 108 at that point.
Well, you are going to go to, what's your promise? You're going to go to, what is it, 108? Is that right?
Well, my dad, when he died at 90, said to me on his deathbed, hey, I lived 18 years longer than my dad did, and I expect you to live 18 years longer than me. So that's going to put you at 108. And I have to say, the one learning that I've gotten from experiencing kind of end of life from 3 different family members is you have to make your health span equal that lifespan, or else you have to be thinking about, like, is it really worth being the burden that you can become on all of your resources, all of your family's resources, and really on yourself too, because I don't think the quality of life, and I know we're not Switzerland and we're not, that advanced in euthanasia in the United States, but I have to tell you, I do think there's going to be far more innovation in how people choose to exit than what we've seen historically. And there may be a digital solution to that as well that proves how voluntary, and it might be legal tech, it might be some combination of legal tech and even some fintech, because ultimately people spend a lot of money on a lot of their resources.
They do.
And it's a pity, really, in a way, because it takes away from their grandkids and others that can get maybe a better education and really a better lifespan for themselves and a better health span for themselves. But that's the way America works. It works right to the bitter end with a view that life is precious. I mean, we won't get on to the whole abortion thing where, life is precious. Life is precious from conception, and life is precious right up to death.
That's a good place that's a good place to end the show. And we'll pick up part 2, and I want to hear, and I know a lot of people do, we're going to do next week, hopefully, if you have time, we'll do 45 minutes or so on your business, your industry, and where you see the direction and any kind of recommendations you have from people. But
sure, let's plan on it for next Thursday.
Okay.
This is Joe Cucchiara with Real Estate Radio Live. Thanks again. For more information, you can go to RERadiolive.com. That's RERadiolive.com. Take care. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.